Welcome to the weekly analysis. Bitcoin is recovering. Let's get started. As we saw from the previous analysis, the hammer candlestick, which was drawn in the week of January 24th to 30th, indicated the possibility of a reversal of the downward movement, which is of interest to buyers within that zone. In the week of January 31st to February 6th, we had a full-body green candlestick. This pattern is called Morning Star. However, for that pattern to be confirmed, this weekly candlestick wouldn't have to close with as big a wick as the one shown in the graph, because the inverted hammer candlestick could indicate, as with the previous hammer candlestick, a movement reversal. See how the candlestick mentioned previously touched the important support zone located in the lower part of the descending channel, around $33,000. And as we saw, if any green candlestick closed above the higher part of the descending channel, the new zone being tested would be the 44,000 one, in which the price is now located. If we look at the moving averages, we're halfway to the 50-period moving average, where it confluences with Fibonacci 0.5. It is the $49,000 zone, and it is potentially the next target price. If we go down to the daily time frame, we see an upside push that started in an oversold zone. The green candle on February 4th stands out, which closed above the top of the channel. Now, the price is in that very important support zone between 42,500 and 44,000. And we see several rejection candlesticks shadowing the higher parts, representing a selling interest in that area. If we start to see red candles below 42,000, we could see a pullback move into the descending channel zone, above 39 to 40,000. If we now look at the chart with the moving averages, we see that the big green candlestick on February 4th broke through the 20-period average with great force. If we look closely, there was also a high volume, therefore showing harmony between effort, or the volume, and result, or the price. On the other hand, on February 7th, it broke the 50-period moving average, and if we continue to see candlesticks closing above those moving averages, the upward move could continue, especially if a green engulfing candle forms and closes above the previous highs, marked with a pink circle. In that case, the price would go to look for the confluence zone of Fibonacci 0.5 and the average of 100 periods. On the other hand, if we look at the red candlesticks closing below the zone marked with a pink circle, which represent a union between effort and result, the next zone to be tested would be the $40,000 zone. Now we'll move on to the Relative Strength Index, or RSI, which is located in the top part. In fact, it's gone from 20 to 60 points. Although there's a slight backward motion, it shouldn't be a problem if it doesn't go below 50 points. As always, we must look at traditional markets in order to get a better idea of the situation. So let's look at the SP 500 index, one of the best representations of the global economy. In the week of January 24th to 31st, we saw an accumulation zone which broke the upward movement. And since then, it is found between important support and resistance zones. If, however, we saw red candlesticks closing below this channel, we would go on to test the previous resistance zone. Here, we have the Nasdaq 100, an index of the United States 100 most important tech companies. Similar to the SP 500 index, we also saw an accumulation zone, which later broke the upward movement with an important resistance zone. Here, the index moved backwards until the support. If we see candlesticks closing below the 14,500 point support zone, it could continue moving upwards. As always, now we look into the amount of Bitcoins available in exchanges, as we know it could give us a good idea about investors' intention to sell. As we can see, the amount continues to decrease until reaching 2.3 million Bitcoin. This means that Bitcoins continue to be withdrawn from exchanges, indicating continuous movement. Now let's look at an interesting indicator, the Fear and Greed Index, which measures the fear and greed present in a market and is found in a neutral zone. An important detail which must be kept in mind is inflation. On Thursday, February 10th, the United States inflation rate of the month of January was revealed. Some expected 7.4% inflation. However, the inflation rate was unfortunately 7.5%. This rate hasn't been seen since 1982. Why is this worrying? Because these levels indicate a loss of buying power. In addition, this could push the Federal Reserve to carry out drastic measures to detain the inflation rate. Some measures which could affect risk assets, in other words, stocks and cryptocurrencies. The good news is that, as we saw on Nebolus, Russia is about to pass a law which will legalize cryptocurrency transactions. Considering it is a big country, it is something that could influence the crypto market to a great extent. And close to Russia, in Ukraine, NGOs have started raising funds in the form of Bitcoin to help the military's defense against its neighbor's invasion. And the world's largest fund management company, BlackRock, is already planning to provide crypto-related services. Another step towards the adoption of this type of assets by financial institutions. In short, Bitcoin has recovered a large part of its fall, and although there's a lot of positive news around the crypto sector recently, we must pay close attention to the macroeconomic data, which will determine the evolution of the market.